In this lesson, we're going to be discussing the two phases of the market. The market really only has two prominent phases that we should be taking note of: the impulsive phase and the pullback phase. These phases are important because they set up the structure of the market, which is going to give us an overall sense of direction and story of price action that we're analyzing. When the impulsive and pullback phases are added together, the highs and the lows will be used to map the structure and determine where the market is going. The highs and lows that create market structure will be formed by candlestick swing formations. So now if we look at the impulsive phase of the market, which can also be referred to as expansion, is classified as full volume pushes in one direction. This is where we're going to see the most momentum to the upside or the downside, depending on where the market happens to be trending at the time. Structural ranges are also going to be created by these impulsive movements, and this will be something that we talk about in a later portion of the course. And what we can see in the impulsive phase are these full volume moves that are encapsulated within these blue ellipses. Now, if we look at it from a candlestick perspective, we can see that the candles that make up the impulsive move are very large bodied bullish candles, signifying that the market is heavily trending to the upside and that demand is pushing the market to the upside. Now, conversely, if we look at the sell side of things, we can see that we have full volume pushes to the downside, indicated in these blue ellipses. And similarly on candlesticks, we can see that we have full bodied volume bearish candles moving to the downside. And what we can also see is that we have market swing points that denote these shifts or these clear indication of the impulsive phase. Once the impulsive phase starts to end, we can see that we have a candle swing point, and when we see the market or the impulsive phase start to end, we can see the candle swing point. And this segues into the second phase, which is the pullback phase. Now, the pullback phase of the market, which can also be referred to as a correction or a contraction, is classified as a low volume counter-impulsive movement in the market. These pullbacks are what are going to lead to breaks of structure, and breaks of structure is something that we'll be discussing a little bit later on in the course. But the main thing to take note of is when we have an impulsive movement to the upside, what happens after we reach the maximum of that impulsive move is we start to pull back or move counter to the impulsive trending market. And what we can see is usually the pullback phases are much shorter than the impulsive phases. They can be quite wicky, where we have a lot of exhaustion with lots of wicks on either sides of the candles. But the main thing to take note of is that it is that counter trend movement that we can see inside of these red ellipses. And again, taking to the notes of what I said in the impulsive phase, when we see this candle swing formation and we start to see the market pull back counter to the impulsive move, we can see that price is entering a pullback phase. And then similarly, when we start to see the opposite candle swing formation, this could be an indication that price is starting to enter a new impulsive phase. It's important to understand the difference between impulsive and pullback phases in the markets. That way we know if we are trading a trending market or we're trading a counter trend market or a pullback. The obvious benefits of trading impulsive markets is that price is moving with volume in one direction, whereas with the pullback phase, price is moving in counter trend. It can be very choppy, can be very corrective in nature, harder to justify or understand when price is going to switch. So the main suggestion here that you should take away from this video is when we're looking to be taking trades, we're looking to be capitalizing on these impulsive movements and avoiding these pullback movements in the market. It's going to make your trading so much easier in terms of understanding direction, getting in proper trades that move in your favor, and staying alongside with the trend. But now that we understand the two phases of the market, we'll take it a step further and start talking about how we actually map out our market structure.